Just for those that don't know what Tiger 21 is, explain what your group does.
Sure. Tiger 21 is 770 of the top entrepreneurs in 5 countries. We have built businesses from scratch. Think of it as the all-stars. And generally, we meet every month around the world in 60 groups, helping one another to invest and think about the broader issues of what their wealth has created. And then we have an annual conference, and that's where we're at today.
I think it's, what, $30,000 a year to be a member? So it is really the ultra wealthy. What are you getting in terms of the mood?
Well, obviously, the coronavirus is on people's mind. It hasn't hit the United States, but the numbers are off the charts in China, and it's hard to know exactly where it's going. So I don't think people are trading into an assumption that it's bigger or smaller. Members are generally, they find to have protection with large amounts of cash, so that if there is a downturn, they can weather through it rather than having to liquidate at the wrong time.
Do you have a sense of how high those cash allocations are right now from your members?
Yes, I do. Our members are holding about 12% cash. And what that means is that given they live on about 2% a year, through one lens, they can weather through a 6-year storm, which is longer than any financial storm in our lifetime. And on the other hand, this large amount of cash makes them ready to be able to pounce on an opportunity if there is a big downturn and they see a buying opportunity.
How do we square that with surveys from the likes of B of A that argue cash balances are near record lows?
Yeah, so the main difference is that our community is some of the top entrepreneurs who have been building businesses from scratch. If all you are is an investor, however you acquired your wealth, you're going to look at cash very differently. But when your entire history has been building businesses and buying into opportunities, cash takes on a very different role. And the level of our members' success over 20 and 30-year periods puts them in a unique position to deploy cash quite productively when the opportunity affords.
Kind of reminds me of what, who was it the other day on our air said cash is trash.
Ray Dalio.
Ray Dalio, yeah. I wonder what you guys think when you hear things like that.
We think Ray is one of the great investors, but our community is about entrepreneurs. I wouldn't go toe-to-toe with Ray investing large sums of capital, billions, but with small sums of capital, our members create magic, and they do that by having the cash ready to deploy when the opportunity affords itself.
What sort of opportunities are they talking about? Is it in the public market or is it elsewhere, like private equity?
No, actually, yeah. So our members have created their wealth primarily in private equity, small companies, and in the real estate area. So if you look at our asset allocation across the $77 billion that our members invest, public equity is only 21%, whereas private equity is 24%. And real estate is 29%. So they're focusing on the areas, and these aren't the big funds. These are where members are rolling up their shirt sleeves and actually working the assets. And they've been able to achieve much higher returns than the market, and they do it in part because they're working together through our groups. This is kind of a self-help group. Members are learning from one another in our monthly meetings and looking at opportunities and sharing deals, and also at an annual conference like where we are now.
Yeah, so Michael, beyond the obvious concerns about the coronavirus, what else is high on the agenda? I mean, in the public markets these days, we talk an enormous amount about ESG, and sustainability is a part of that. Is that something these people care about too?
Very much so. Sustainability is one of the growing factors. In fact, at the conference, we have a couple sustainability panels. And actually, one of our groups, we have groups throughout Europe as well, has taken on the challenge of helping their community become carbon-free. We have some of the largest solar investors and developers within our group. So sustainability is very much on our mind, but energy is critical. You want to have the lights go on when you turn the switch on. So having a smooth transition to a sustainable energy economy is something we talk a lot about.
What are you hearing about the election? Is there any candidate that your members are supporting and or are particularly worried about?
So because we have such a diverse group, we have people on both sides of the political aisle. On the Democratic side, probably we don't have a lot of supporters of a socialist rearrangement of our economy. Our members sort of built their success the old-fashioned way, and it's not so much that they're against paying more taxes. They just want to make sure that taxes aren't just a redistribution of wealth, but they actually go to help stimulate the economy. So it would be infrastructure spending, maybe education, things that build the long-term strength of an economy is something that our members are much more interested in. But they're aware of a $1 trillion deficit. It's just not sustainable, and it makes members really nervous, as does a lot of the confusion and activities going on in Washington. So they hope wherever we come out of the election, some of that goes away. One of the things is our members have huge immigration. We have lots of immigrants who have come to America and really made good. And being able to attract some of the best and brightest people from around the world to keep our economy going is something that comes up quite often.